Bitcoin is bouncing back and forth between 80 and 90K like your dad going back to the fridge over and over for more leftovers. But are we about to drop into another year-long crypto winter, or are things about to get brighter for 2026? Hello and welcome to the Milk Road Show, the crypto show that is here to remind you that whatever you think Bitcoin is going to do next, you're wrong. I'm your host, John Gillen. Today we are joined by Sid Powell. Sid is the CEO and co-founder of Maple Finance, a blockchain-based platform specializing in institutional lending and private credit strategies, which launched in 2019. They are now managing in excess of $4 billion in USD. With a background in debt capital markets and institutional banking, Powell has driven Maple's evolution into a key player in DeFi, including innovations like using Bitcoin for on-chain loans. Sid is going to give us an inside scoop on Bitcoin businesses, as well as the major trends he's watching out for in 2026. So if all that sounds good to you, make sure you like and subscribe, share this episode with someone who needs to hear it. And as a reminder, we have decided to keep our Black Friday sale going a little bit longer to keep the good vibes going. 40% off all access is still on up until midnight tonight. This is your last chance for real this time to upgrade and lock in Crypto Pro, Macro Pro, AI Pro, plus our all access portfolio, tons of other exclusive all access content at a 40% discount. We are wrapping this up for real at midnight tonight, though. So if you're interested in getting on the alpha there, joining our community, make sure you check out the link in the show notes. Today's episode is brought to you by Blocktrust IRA. Let AI outsmart the market and grow your crypto while you sleep. Reserve DTFs, get exposure to the entire crypto market in a single token, and Chainlink, break the interoperability barrier and power the future of tokenized finance. And without further ado, welcome to the Milk Road Show. Sid Powell, how are you, sir?
I'm good, John. Very glad to be here. Thanks for having me.
I'm really excited for this conversation. I'm so glad you're here today. I wanted to just start with what's on everybody's mind. Is Bitcoin in a bear market?
Yeah, start with the easy questions.
Yeah.
Like at the start of the year, I had a lot of predictions for BTC being north of 150. I was pegging it as kind of somewhere between 150 and 180 this cycle. I think end of year prediction would be it probably won't get there to 150 to 180, but I do think that I don't think we're at the end of this cycle. And so I think Bitcoin can still get there in 2026. I look at, I think recently it's been troubled by some of the near-term stuff, whether it's a hawkish Bank of Japan kind of signaling the end of the yen carry, or whether it's just liquidity and a bit of poor public perception around things like DATs. However, I do think, you're still looking at upcoming rate cuts. We could see liquidity kind of re-enter the market. I think institutional adoption of Bitcoin is still very strong. And so I think we can still get to 150 in 2026. So for me, it's not the end of the bull market. Sorry. It's just in a bit of a sideways trend at the moment.
Yeah, I think a lot of us are trying to psych ourselves up for 2026, and the history on this is that we might have a long bear market here. But I'm with you on this, right? Like my target was 140K, and I am seeing a lot of bullish things for me for 2026. So I'm really hoping you're right on that. Yeah. You have been also calling for, or noting rather, that even though the market in Bitcoin is chopping in price action, the demand for crypto lending is still been strong. And I'm curious about how you've seen that developing in this downturn. Are you still seeing institutional adoption and demand for on-chain lending, or do you think things have waned recently? What's your experience, your perspective been like on that?
There's a certain irreducible amount of demand for crypto-backed lending that we see in the market. So there's always going to be some activity from the prime brokers. I think during slow periods, demand from miners will pick up to borrow because they don't want to be selling down their reserves. It's just the part of the market that slows down a little bit will be the hedge funds and the yield funds. So activity from them slows a little bit. But I think from the rest of our clientele, including prime brokers, exchanges, miners, we're still seeing relatively good demand. And the other thing is that you have two sides of the market. So you have the people who want to give you dollars to earn a yield. And for us, that's the supply side of the market. And then you have the folks who want to borrow and use that capital. And what we're seeing is that in a sideways market like this, there's very strong demand from the supply side because folks are no longer feel like they're missing out on market beta or the gains from Bitcoin appreciating. So they start to become very focused on how do they get a yield, how do they make their dollars work for them, and so we're actually seeing pretty good inflows of late, and I expect that trend to kind of continue heading into the end of the year.
Gotcha. Yeah, it's nice to have a business where you have some all-weather demand, especially in crypto.
Yeah,
I
it's
think maybe
counter-cyclical.
just to,
Yeah.
yeah, well, we're gonna have some cyclicals here. I think just for our audience to kind of level set before we get deeper into Maple and your business, you've described yourselves as an on-chain asset management firm. What is on-chain asset management? Just level set for us on what this is.
Yeah, I think this year we've been calling ourselves an on-chain asset manager, and I think the real key word there is on-chain. So what does it mean? We all know what asset management is, but what does it mean to do it on-chain? So when we think of on-chain asset management, we think of transparency. So all of Maple's loans are in tokenized form. You can see them on the blockchain. We think of liquidity. So one of our fastest growing products this year has been Syrup USDC, which effectively represents the basket of loans. It's been one of the fastest growing liquid dollar yield assets, and it's composable through DeFi. So you can use it to borrow on Aave, you can port it to Solana, you can fix the interest rate using Pendle, or you can enter and exit instantly on secondary markets like Uniswap. So the composability through DeFi is a key aspect of doing this on chain. And the other elements are we're very focused on crypto native capital markets. So you'll see a lot of folks looking at taking a fund that exists off chain and then they just copy and paste it on chain. We're very much focused on doing the opposite, which is we want to take crypto native asset class, like Bitcoin-backed lending, and then we want to instead bridge that to TradFi and start to introduce traditional finance audiences to this. And then the other element is that we always try and have utility associated with yield. So if I could encompass Maple in kind of a traditional finance analogy, I would say we're very similar to Apollo. Apollo is an asset manager who is ultimately focused on lending and fixed income products. They just happen to do that with the old rails. They use fiat bank accounts, they use hard assets. Maple is very much focused on doing this with stablecoins, crypto native assets, and we distribute our asset management products through DeFi.
Gotcha. Okay. Yeah, I think that's helpful to just kind of explain this to people who maybe aren't super familiar with Maple and what you're doing. So that's really helpful there. I wanted to kind of get a framing and sense of like who your clients are and who you're targeting for growth as far as your marginal next user. Your minimum loan size is 10 million. And that kind of like precludes a lot of retail investors. So I'm curious your thoughts on that. Like who are primarily your clients? Who are your next clients that you're trying to bring in as far as like new user growth? And do you think that number of 10 million might go down or go higher? And like, why is it set there right now?
It's a good question. So the 10 million really puts us in the kind of the institutional lending market. So we wouldn't lend to, say, a mom and pop retail shop or individual consumers. Different kind of regulation, different sort of customer service, and different, wholly different operations required. So our typical borrower would be, it's prime brokers, it's some of the exchanges borrow from us, some large trading firms. I think some of the Chicago market makers who do a lot of high frequency trading, right on to Bitcoin mining companies who might use a loan from us for operational expenses. So they don't have to sell Bitcoin, and even including family offices and high net worths who might want to take out a loan against crypto holdings so that they can purchase real estate. So it's the smallest loan would be 10 million. The largest ones we do would be 100 to 200 million at a clip. So we now have that kind of scale, given that we have 4 to 5 billion in AUM. But then on the other side, we have the people who give us money. And there are some retail users in there because we have the permissionless Syrup USDC and Syrup USDT products. Those are available to retail outside of the US. But we also do have a lot of institutions who use those. So whether it's a stablecoin issuer might use it for some of their treasury. We have hedge funds who use it. High net worths, family offices, corporate treasuries. So it is a real mix on that side. But I think one of the things that facilitated growth there was the DeFi integrations. So it's plugged into Aave, Morpho, Euler, Solana. Pendle.
Yeah, gotcha. Okay, yeah. See, this is, I think, very helpful because just because your primary clients for your lending product are major institutions, it doesn't mean that there's not still a way for retail investors to get involved in this business. And I think that's very helpful.
And it's a very important element that this type of product, so yield from curated loans to institutions, which are all over collateralized, is not a product you can actually buy anywhere. You can't go down to Morgan Stanley or any of the wealth managers and buy that product. So it's a very unique offering. And that's one of the, we'll talk later about niches and moats, but I think that is one of the important things that we've tried to do to differentiate ourselves is we are the only ones out there offering curated institutional yield that all comes from over collateralized loans. And that's one of the reasons that we have the 10 million minimum so that we can give you a product that you can't get elsewhere.
Gotcha. You have been focused on stablecoin adoption as a crucial piece of what's helping Maple grow and grow your business. Can you tell us about this? There's been a huge growth we've seen for Syrup USDC, and just tell us a little bit about these stablecoin products. There's going to be a lot more of these coming to the market. How is Maple going to be working with those to continue to expand this business that you're building here?
It's a good question. I think stablecoins, the way I would class stablecoins or describe them in relation to our business is it's a little bit like oxygen, or it's it's the water that we swim in. So one way to think of crypto-backed lending is as a percentage of stablecoin supply. The other way that I think about it is as a percentage of Bitcoin market cap. So Bitcoin recently was around 2 trillion market cap, and the outstanding loans against Bitcoin were around 25 billion. So it's a bit over 1%, like 1.25%. And then the other way to look at it is since Maple is lending really only stable coins, one function of how big our business can get is as a percentage of stablecoin supply. So stablecoins at around 260 to 270 billion, at 25 billion in outstanding loans, it's a bit under 10%. So if we want to 10x our business, then we need to get the circulating supply of stablecoins way up, because otherwise we have to then take a higher share of stablecoins. So we have to go from 8 to 9% to 20%. And so stablecoins are very much a growth tailwind for the space over the next 12 months. But we've seen the entry of Web2 players like PayPal. We've seen other big crypto players like Ripple enter the stablecoin space. And then we've also seen Stripe, Revolut, and other neobanks and fintechs suggest they would launch their own stablecoin very soon. So I think this is going to benefit crypto native businesses like Maple, but it's also going to drive a lot of adoption because now your friend who's not natively using crypto will be able to access crypto in his Revolut account, or they would be able to make a payment using Stripe's infrastructure, but in stablecoins. So I think it's going to be very beneficial for the space. Maple will look to work with all of the stablecoin issuers. We see ourselves as an application layer built on top of them. We're not trying to make a stablecoin ourselves. We want to be on the application layer that benefits from the infrastructure.
Bitcoin changed the investment game. Now AI changes the strategy. Crypto's wild ride demands perfect timing, selling before drops, buying as it climbs. While most investors panic, sell, or hope, a select few leverage a crucial edge: AI. Blocktrust IRA's trading platform spots market patterns with precision no human can match. Since 2020, their Animus AI platform has outperformed Bitcoin by over 250%. Visit milkroad.com/blocktrust today to get up to $2,500 in bonus crypto and transform your investment strategy. ETFs provide investors with a structured, disciplined, and diversified approach to crypto, which is cool, but the world is moving on chain. We need a crypto-native equivalent. That's exactly what Reserve's decentralized token folios, DTFs, bring to the table. Reserve DTFs are rule-based baskets of crypto assets packaged into a single token, like CoinMarket's CMC20, crypto's version of the S&P 500. Go to milkroad.com/reserve to find out what's on offer.
I've been very interested by seeing which products, which companies go for this thing of like, we're going to build our own everything, our own L1, our own stablecoin, versus ones that are like, hey, this is what we do, and we're going to focus on that. And it's been interesting to see those different strategies playing out. I want to talk more about partnerships, integrations. Maple has been very selective, and I would say remarkably successful at making selections for partners to integrate with. You guys started on Ethereum. Obviously, you've gone to Solana, Arbitrum, Linea, Plasma, and I believe that's the list so far. But I'm sure that'll expand from there. But I'd love to know, like, what's that evaluation process for selecting who to do these integrations with, like for you all, and what are just like maybe highlight one of those as like something you're excited about that's come out of these integrations and unlocked opportunities for Maple.
Yeah, for sure. It's a good question. So you get you get a lot of pitches to go on other chains at the moment, and
I'm shocked to hear that. I'm shocked.
and I think one of the misconceptions from the chain side is that it's a very low lift, particularly if it's EVM, where you just effectively copy paste your contracts and then you're good to go. But there's still a lot of BD effort that goes into getting deposits on the chain, coordinating with your clients. If we take deposits on a chain, we then need borrowers on the chain as well. So it is a little bit more involved than just pasting or build it and they will come. So how we've tried to prioritize these chain launches has been some reasonable estimate of what we think the AUM or the total value locked available on that chain would be. So we'll look at stablecoin supply, projected stablecoin supply over the first 6 months, and therefore how large can our presence be on that chain. And then we'll look at, are there any incentives provided by the foundation? And for us, I think one of the changes that we've made, so previously we would have just gone and launched on a chain. Nowadays, I think the reason for the success that we've had in the launches on new chains has been that we've taken a partnership approach. So in Solana's case, we wanted to be warm out of the gate with Camino and Jupiter partnerships so that users could loop, enhance their yield. There was an existing venue that they could go to access Syrup USDC or Syrup USDT. And so I think that partnership approach has been critical to our success, but also launching on chains where there are going to be a large stablecoin presence. It doesn't make sense to go onto a chain if there's only 100 million of USDC, because even if we got 10% of that, we're only going to be doing, it's 10 million AUM, so it's not going to move the needle. Plasma, I think, was a really successful recent launch. So we've done that in partnership with Aave, with Midas, and with the Plasma Foundation. So the vaults that opened up there filled within 200 million within a minute. So I think that was really successful, and we would look to replicate those partnerships when we go to other chains. So I think having one where you can allow looping is a very, very strong partnership pitch that you can take to new chains, whether it's, Stripe launching their chain or Robinhood launching their chain, or returning to Base or some of these other chains out there. But that's what we look for. So strong partners, strong stablecoin, AUM or TVL, and then cooperation with the foundations.
Gotcha. Yeah, that makes a lot of sense strategically there. And I appreciate you kind of like spelling out your thought process on that, because I think a lot of people see these partnerships and integrations, but they don't really know like what's going into it or what's driving that. So that makes a lot of sense. And it's helpful to understand. Yeah. I think
fewer and better would be our mandate overall. I would say we're not trying to do dozens of these. We want to be really focused and deliberate with where we do them.
Quality over quantity. Got it. That makes a lot of sense. I had a question on this. I think a lot of people in crypto, especially like digital asset native investors, have a little bit of, let's say, like lingering PTSD from last cycle with lenders and so forth. The flash crash of October 10th, a lot of people are still like checking their tails, being like, somebody's gone bust, somebody's going to blow up at some point. I'm just curious, like from your perspective, what was it like going through that flash crash? Was it like, everything worked as business as usual? Was that a stress test for your systems? Like, what was that experience like for Maple Finance?
Something like that is always a stress test. I think it's healthy. If we didn't have them, then it's like building up antibodies in your immune system. So we need stress tests like that. In Maple's case, I think we had about 9 margin calls that afternoon and into the evening, and all of our clients met their margin calls within 3 hours. So I think it was a pretty strong showing from our side. It was good because we got to test some of the new systems that we've been building in the wild and kick the tires on them. And so coming out of that, we then know what we need to improve, whether it's automated notifications on margin calls, or whether it's the way that our system kind of represents things to our clients, or adding self-service options for them. So there's always learnings coming out of stress test events like that. But overall, things perform very well. So less than 3 hours to cure all margin calls. And the other thing that I think I was very interested in was, typically I would expect there to be a lot of outflows as people just pull the ripcord first and then ask questions later. But what we found was actually Maple got 150 million in inflows over the 48 hours following October 10th, which told us that people were viewing Maple or the Syrup USDC and Syrup USDT products as kind of safe havens, where they were confident in the risk management and the sustainability of the yield on those products. And so I think that was something that we found really encouraging. But typically we budget to have 2 or 3 of these types of days a year. I think the last one was kind of the tariff stuff in March, April. And then the time before that was the yen carry unwind in August of last year. So typically we're expecting a couple of times a year, and then everyone's all hands on deck when it occurs.
Gotcha. I think that's really helpful to hear that things went well and you actually saw an increase in demand. That's a big vote of confidence from the market. I'm curious your thoughts on where we are in this dip. Are there particular unique opportunities that come during a bearish period like this versus a bull run that Maple takes advantage of, or is it just like you said, like when people are looking for a stable place and safe place to earn yield in crypto, they come to you when the bull run is taking a breather? Like, or are there like other opportunities for Maple that come during these kinds of periods?
It's an interesting question, because our business is definitely, it's definitely still subject to business cycles. Lending is inherently like that because you have debt and credit cycles. However, the opportunities we would see are that some of our other peer lenders might pull back in appetite. We still want to have very tight credit underwriting standards, but when something like this happens, we might look to peel customers away from kind of a shaky competitor. A competitor is looking at maybe not renewing a customer's loan, and we want that customer. Well, we might try and pitch them on coming across to us. So particularly if we have a strong balance sheet, because we're not seeing outflows, whereas some of our competitors who might have, let's say, less funding diversity, or they're more at risk of one of their funders pulling capital from them, then they can't extend commitments. Whereas we can be we can pitch for the business from a position of strength, because we're seeing inflows and we have very sticky capital. So it allows us to pick up bigger and better customers who otherwise might be with a Coinbase or one of the other large lenders in the space. The other thing we do is, we're always kind of revisiting which collateral we would lend against. And one of the things we did do after October 10th is we kind of took a few, different tokens off of the collateral list that we would lend against. So we took it as an opportunity to kind of tighten up and go after bigger clients and kind of consolidate our lending book there.
Gotcha. Yeah, I think that's a good way to deal with those situations. Look for opportunities, clients to win.
Yeah, you always want to be hoarding cash in kind of downturns, so that you have the opportunity to pick up business that your competitors won't.
I think I'm going to update my LinkedIn profile to just say hoarding cash. Okay, I think I want to hear some of your thoughts on innovation, regulation, and sort of the future of on-chain asset management here. And I wanted to start with AI. Here at Milk Road, we've been very interested at this, or in this intersection between artificial intelligence, digital assets. But I think that there's been a struggle to find sort of some product market fit there. But I'm always curious how people are thinking about this, how they're leveraging AI. How is AI making an impact on-chain asset management at Maple Finance now? And how do you see that playing out in the future?
It's a good question. I think a lot of people had this idea that overnight you kind of flick a switch and then we would have AI running our entire business, which in Maple's case would be, originating loans, doing all the margin calls, processing all the collateral. And it's not the case. However, there is real traction happening on the AI front. So one of the teams that we have liked working with recently has been Pitfalls. So I'll give them a shout out. But these guys they use AI for risk management software. And so for us, we have to, we do collateralized lending. And so we always have to be on the lookout for changes in the volatility of Bitcoin, ETH, Solana, XRP, any of the assets that we lend against. And that helps us set buffers. So where do we margin call a client? Where do we liquidate a client? And what kind of concentration could we do to a single client? And what BitPulse has enabled us to do is radically shrink the amount of time it takes to kind of underwrite a new loan, because we can do historical back testing based on the volatility of the asset. And we can work out the probability that we would have had to margin call that client over the last year and the probability over the next year. So it's like a force multiplier for the guys that we have on the team that enables them to do their job better. And now every morning I get a digest from BitPulse that says, here's the health of all of the collateral in the book. Here's the level of volatility. Here's where your kind of dormant risks lie and what you should be keeping an eye on. That's what I would call phase one. Then as we get to phase two, we'll allow it to start making decisions for the business. It may not be that particular use case, but it would be sizing of the loans of the book. Then it might be, then stage three might be automatically prepping collateral if we think we're getting into a period of volatility and sending out notifications to our client. So I'd say we're in the early innings. We're in phase one at the moment, but over time, where we at Maple hope to use AI is very much for automated risk management and really ensuring that we're getting the most out of our portfolio and delivering the best yield to our clients at the best risk-adjusted rates.
That's really interesting, and I agree with you. There's like kind of a big gulf between where we are now and what AI can help with, and where that's going to be going. So it's interesting to see how that's going to scale from here. I'm interested to get your thoughts on this. Paul Atkins, the chairman of the U.S. SEC, said that there's going to be an innovation exemption coming in January for digital asset firms and people doing business in the digital asset industry. And I'm curious if Maple is excited about this, and what products, what opportunities that you guys might try to bring to market, or launch new things, or just play in the U.S. sandbox, so to speak. Once this exemption is in place in January, like what are your thoughts on that? What might you guys be able to unlock with that?
One, I applaud the effort. I think it's the only way for innovation to go forward is you do need to drop the cost of compliance and the regulatory side of launching new products, because startups are the ones who are, they have the most incentive to offer, good competitive new products. However, they also have the least balance sheet wherewithal to go and spend $1 million on lobbying. JP Morgan, it's very easy for them to spend $1 million on lobbying. It's very difficult for someone like us to. So products that we would look to launch, we have Syrup USDC and Syrup USDT are both only available outside the US. So these are effectively retail DeFi first yield products. We would love to be able to offer something like that, even if in just a limited form in the US or to US users. We think it's very battle tested now. So something like that would be kind of top of our list. And then we look at, we've looked at whether we could have a kind of, whether it's like a permissionless product out there as well. I think it's probably a little bit further away. There's a few kinks to be worked out there. But first and foremost, I'd love to offer our DeFi-friendly versions of our products, so Syrup USDC and Syrup USDT in the US. Longer term, though, we've looked at whether it's possible to do a retail permissionless product, or could you have other horizontal things like Bitcoin-backed mortgages? Particularly, my view has been that Gen Z is not going to be real estate first in the same way that boomers were, that instead they would, they're much more on the cutting edge of adopting crypto in their portfolios. And so they might look to leverage Bitcoin wealth in order to fund things like house deposits or home loans in future. So there's 50 million Americans who hold Bitcoin. It's growing at anywhere from 20 to 40% a year. So I think we want to be capitalizing on that trend and being able to offer, more and more kind of Bitcoin related lending products to the US.
Gotcha. Yeah, I'm excited to see how this plays out too. So I'm rooting for you guys to get some clarity there. Speaking of clarity, the Clarity Act is still being discussed in Congress, and there's been a lot of attention on this. And I'm curious your thoughts on this. Do you think that this market structure bill would give a lot of bullish momentum to Maple, or do you think that this unlocks a huge wave of new competitors coming into the space? What are your thoughts on this? How big of a deal would this be for Maple's business if the Clarity Act comes through?
I think it'd be really beneficial for Maple's business. It would unlock a wave of kind of new momentum, and it'd give us the ability to work with more traditional players who would have less reticence about doing things with the crypto industry. The problem, or the double-edged sword there, is that you can't have a wave of new momentum come in without interest from competitors, because momentum necessarily means that there have to be competitors interested in what you're doing. So the answer is it brings both, but I think net the benefits outweigh the drawbacks. I think the key thing, I have read the latest draft of the Clarity Act, so I think some of the key things that are encouraging are the carve out for DeFi and for kind of permissionless governance. Also, the set of sort of basic disclosures. So if somebody like us wanted to offer a product to retail, there's at least a shopping list of kind of basic disclosures that we would have to meet if we wanted to offer our stablecoin yield product to them, for example. How the risk is managed, where the assets are held, what kind of rights and obligations that they have and we have. So I think that's going to be very beneficial for the space. Best estimate is that this is slated for sometime in 2026 at this stage.
Right. Yeah. And I think that there will be, a plethora of things that come out of this bill in terms of impacts. But I agree, it's mostly constructive, and I'm excited to see where it leads to. I wanted to get your thoughts on something else. The CEO of my old firm, BlackRock, was interviewed in The Economist this week about, and BlackRock's like very all in on this asset tokenization trend. Exactly. Yeah. And I'm curious your thoughts on this as a development in like the digital asset space. How do you see this benefiting Maple? Does this all unlock more new products that you guys might want to like explore? Do you think this is just talk about that, because there's a lot of TradFi firms that are coming in, and I'm curious to see, are they going to adopt like crypto native platforms and products, or are they going to like build all of their own? And like, what does tokenization actually look like when it actually gets out into the wild? Sorry, that's like 5 questions at once.
No, I know. Yeah. There's a bit to unpack there. I'm very bullish over the medium to long term on tokenization, and I think it's undoubtedly very good for Larry Fink's business because it's additional distribution for existing fund products. So he has a bunch of funds, and if he can wrap them in tokens, his idea is that he can then increase the utility of them and reach a marginal Gen Z investor who otherwise hasn't thought about buying BlackRock funds. And they can buy them in smaller size. He reduces back office cost. So that's the reason a lot of traditional asset managers are interested in it. What I haven't seen is the corresponding interest from the marginal Gen Z buyer or investor. That Gen Z investor has a Coinbase account, and then they probably have an on-chain wallet, and they're interested in Bitcoin because they think that the old system is a scam. They're not really out there hankering to buy the latest private credit fund or, XYZ TradFi instrument. They've opted out of that system to buy Bitcoin because they think the rest of the system is a scam. So the idea that they're just going to buy it because there's now a tokenized version of it, I think has been a little bit short-sighted. That being said, it is an opportunity for us because we lend against currently tokens, but in future tokenized assets. We've done loans before against the Grayscale Bitcoin fund. And so the answer is, it gives us more inventory to hold as collateral and to lend against. So we would absolutely view it as beneficial for our business. And notwithstanding the fact that JP Morgan already does loans against funds, doing loans against tokenized funds is a different operational problem, and it lends itself to our expertise. So it creates opportunities for us to partner with folks like that. But I would say the issue that I still see at the moment is we're waiting for the buy side demand to show up. We're waiting for institutions to say, hey, I really liked this BlackRock fund when I could buy it in a Charles Schwab brokerage account. And I really like it as well when I can have the tokenized version of that I can hold in my Coinbase Prime or my Robinhood account or, XYZ other venue for this. So that's been the gap. But I think that's why I say medium term to long term rather than short term in that caveat.
Sure, tokenized financial products are the future, but there is a big sticking point. They all need to speak to each other. This is a tough problem to solve, but Chainlink does exactly that. It's the universal language for financial markets, linking Wall Street to Web3, banks to blockchain, and so much more. See how Chainlink is linking the world by going to milkroad.com/Chainlink.
Bringing this back to, I appreciate the thoughts on that. Bringing this back to Maple here, I'm curious where you're putting most of your effort on business development, because a few times you've talked about finding demand from the marginal user and sourcing that in the market. What does that look like for Maple? Where are you putting those efforts? How are you reaching new customers, new users? What does that process look like for you guys right now?
It's a good question. For us, we've been putting a lot of effort into the DeFi distribution. So we've had very strong partnerships recently with new chains like Plasma, blue chip DeFi protocols like Aave and the Sky ecosystem. So we want to continue to expand that DeFi presence of ours. In tandem, we are prepping for the entry of TradFi. So we want to be ahead of the competition. And so one of the things we're working on is the first crypto-backed securitization at the moment. So we're excited about this class of product. We think that if you can get in the 6.5% to 7% yield range for Bitcoin-backed loans, and you can package these in an investment-grade note or asset and get a rating on it, then we think that there will be a lot of TradFi buyers for that fixed income paper. That gives us diversity where we have really good distribution in DeFi, but we can parlay that to getting really good distribution among traditional asset managers. So that's been a big focus for us for 2026. But we're going to continue to launch on new chains, new DeFi integrations for Syrup USDC and Syrup USDT. And our target is ultimately to get to over 100 million ARR in 2026. So for us, that looks like we need to have north of 10 billion in deposits, which means really north of 20 to 25 billion in kind of AUM for that to happen. So that's our North Star as a team for next year. And it means we've got to bring TradFi in. We've got to do better with DeFi players as well. So more stablecoins, more chains, more protocols.
Yeah, and I think that focus on DeFi is really encouraging to me to hear, because it's a lot of people I feel like are more focused on the TradFi side, but I'm glad to hear you're still all in on that. I want to hear your thoughts on building a moat around Maple's business. As we've discussed, there's a lot of great things happening in regulatory spaces about making this a space it's clear for businesses to do business in and to build new things. There will be competition. How do you go about thinking about protecting Maple's business and building a moat around that for the long term?
It's something we think about a lot, and our thinking has probably evolved. So when we started Maple originally in 2019 and then first launched it in 2021, we had the idea of being a platform and being infrastructure. And I think platforms, Airbnb, Uber, asset light, network effects was all the rage back then. But over time, what I've observed in my own kind of reading of startup history is that you need some degree of vertical integration to protect your margins and protect your business and give yourself balance sheet strength. Apple is vertically integrated. Tesla is vertically integrated. SpaceX is vertically integrated. Amazon is even vertically integrated. Amazon doesn't do fulfillment through, some other warehouse provider or some other delivery firm. They developed Amazon Logistics. And so Maple originally was a platform where we had other risk managers. We call them delegates. And nowadays you'd probably call them curators or vault managers. But we brought that in-house and started doing it ourselves. And that gave us better pricing power, meant we had more control over the end product and could get to market faster. So our thinking in terms of Moat has evolved from its thinking it was better to be an asset-light platform to now it's better to be kind of vertically integrated. You want to control the creation, management, and distribution of your products. So that's where we think the moat comes in. How have we affected a moat, and where is our moat visible today? So, why does a platform like Aave like working with us? Well, Syrup USDC and Syrup USDT produce a higher yield than other collateral that's out there. And so that's a win-win for Aave and for us. we get more AUM. They get to boost the utilization because if you have collateral with a higher yield, it becomes more of an incentive to borrow against it and loop it on Aave. But the reason we're able to get those high yields is we focus on institutional clients. And so we give them the ability to post native Bitcoin. They don't have to wrap it. We give them the ability to put it in tri-party custody, so they don't have to take out credit risk. They can put it in a Anchorage or BitGo or one of the others. And then we do more borrower-friendly liquidations. So in DeFi, often if you hit a liquidation threshold, you get 100% of your collateral is liquidated, and there's some kind of penalty. We would only liquidate, we give you a margin call level, and then you've got anywhere from 12 to 24 hours to post. Then if you hit a liquidation level, we would liquidate you back to your initial LTV, and then we don't charge a penalty. So we've protected our users. However, we haven't nuked their collateral, and then we haven't charged them an additional penalty. So it makes it very friendly and good for institutions to use us. And in turn, they're willing to pay a little bit more for it. And that makes us then a great fit for integrations on Aave and Euler and Morpho and lending protocols. And that's been our niche so far this year, and kind of what has propelled a lot of the growth.
It's really interesting to hear you describe how you're creating value and aligned incentives for so many different players and stakeholders in the process and in the market. Really interesting stuff. Sid, thanks so much for being on the Milk Road Show and sharing all this with us. I want to end with one more question here.
Sure.
This is maybe the most bullish I think I've ever seen TradFi and institutions on digital assets, and at the same time, probably the most bearish I've ever seen retail. And a lot of our audience are retail investors who are feeling burnt out, frustrated, and a lot of negative things about the market right now. Give us some hopium here. What are you most bullish on for 2026? What are you most excited about, and why should people be anticipating a green year in 2026 and not a year-long doldrums of crypto winter?
Tough question to end on. So I think my conviction in crypto is unshaken. And I think the fact that we had the Genius Act come through this year, enabling stablecoins, and that we look like we'll have the market structure bill, so the Clarity Act, come through in 2026, I think is very bullish for everyone in the space. And retail should take heart there. So if there are more stablecoins, one theory is that it'll trickle down into purchasing power for alts and for other large caps. So I think that will ultimately benefit retail. And then the other thing is that you're seeing more access to crypto trading. So soon it will be enabled in your Revolut account, or already it's in Robinhood, but it'll be enabled in more kind of neobank accounts. So you'll have more people actively able to trade crypto. You'll have more stable coins there, which are primarily, today used to purchase crypto. And so I think, notwithstanding that price action this year has been a little bit tough and most coins have kind of given up all of their gains, I think if you stay the course in 2026, I'm very optimistic that, that persistence and resilience will be rewarded by the market for retail.
Persistence and resilience will be rewarded is a very inspiring quote to end on. Sid, thanks so much for being here. Where can we send people to find more of you and your work online?
Perfect. So I am, as you can see the handle there, so I'm at SyrupSid on X. So, feel free to follow or to reach out there. We are at Maple Finance, one word, on X, and we try and be pretty active. And then our website is maple.finance. So for anyone who wants to kick the tires on a product or take it for a test drive, feel free to go to maple.finance.
Well, thanks so much for being here. I appreciate you pouring syrup on everything in the market for us today. Thanks for being on the Milk Road Show, Sid. It was great to talk to you today.
Thanks for having me, John. It's my pleasure.
Absolutely. And it was great to have all of you with us today too. So we hope you learned something today. Until next time, stay safe, stay educated, stay bullish, and we will see you all in the next episode of the Milk Road Show. Thanks for being here, everyone. Bye.
If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.